Welcome back to my channel. So today's topic is unlocking the best ICT order block trade entry confirmation. Now, before I start this topic, I would like to say welcome to those that have been following this channel and are gaining value. And I always give a shout out to my coach. He did a wonderful job and he's still doing a wonderful job on me. And I'm sharing the knowledge out for those who are also struggling to understand how the Forex market works. Now, before you can use this, you have to confirm this whole condition, which is what? You have to confirm the market, the zone you are marking is in the premium. That is the use of a Fibonacci. Make sure it created a BOS, that is break of structure. CHoCH, change of character, or some people do use it as MSS, was being created. Imbalance or fair value gap. On this channel, you see a video of an example of how an imbalance and fair value gap look like, and the other block has to be unmitigated. Now, I'll also explain to you a two time frame rule on how you can enter a perfect trade using the entry confirmation for your analysis. Now, on this example here, I want to give you guys a secret that changed my trading. It helped me understand how to mark the chart very well. Now, you have to make sure that when market is retracing back, the bodies of the candles have to close above it. And we can see here there's a confirmation for 1, 2, 3 and above, meaning that is a full retracement. Can you see that? And what happened there? Market came down and broke this low, which signaled for you as what? As a BOS. I'm using the 1 hour time frame as a BOS. Some people might pick here as their BOS, but I will take here as my BOS because if I go to lower time frame, I'll tell you why I picked this upper hand. Now, the next one we are looking for, which market has done, market has created a BOS, which is number 2. Number 3 states that it must be in the premium or in the discount. And what am I seeing here? I'm seeing what? I'm seeing a bearish momentum which signal that market is going down. I'll take my Fibonacci from the high to the low and what? And look for my institutional reference point in the premium. The next question is what? Imbalance or fair value gap. This is a full imbalance, but actually this whole imbalance is too big and part of it is already on the discount. You can take your Fibonacci also and measure the imbalance, and also 50% of this imbalance is what we call consequent encroachment, which you can see also that it's also in the discount. So I will scrap that out. The imbalance will have to be filled up, but it's too big for a potential entry. So we're going to refine. The last one we have here is what? An unmitigated order block, which is this here. Now, our main focus is getting a good confirmation and not being an aggressive trader on entering the trade. Now, on a lower time frame, if I go to my 15 minutes, that is where our two time frame rule comes in. My coach always emphasizes on that, and I will tell you it has changed my trading entirely. Two time frame rule. Two time frame rule. I can't really type here. Let me see if it's possible. Two time frame rule. Let me delete that. It's not necessary. Now, the two time frame rule. The two time frame rule will change everything on how you analyze the market. Now, if you go to a lower time frame, on a higher time frame from here, trying to delete this whole diagram. On a higher time frame from here, if you can see it very, very well, we are seeing that it's only one candle that is going up. But if you go to a lower time frame, using our two time frame rule, we will see the market as this: lower low, lower high, lower low, lower high, lower low, lower high, as what? As an uptrend. If you go to a lower time frame, 5 minute time frame. And what will happen when markets get here? Market will keep going its momentum. Let me increase the speed. You can see it, right? And it's by to this level. Now, if you go to 5 minute time frame, this is how we're going to see the chart. Let me go to a 5 minute time frame to show you. And can you see a break of structure? A break of structure, which I just showed you on this diagram. Now, going back to 1 minute, I'm going to delete this diagram. On 1 hour, I'm going to delete this diagram for you. On 1 hour, I'm going to press play. Now, Market is already in the zone, which signal to us that this upper part here is a form of inducement. For those who know what inducement is, if you do not understand inducement, you can go to my channel and you see a video on inducement. That's an inducement that is there. What will I do? Me being an aggressive trader, I won't just put my stop position here and put my stop loss above. I won't do that because I want to refine my entry to get a lower stop loss. I will come down to 5 minutes. Some people do use 15 minutes. It depends on you. And what will I be looking for? I'll be looking for a change of character. Because why? There was a break of structure here. There was a break of structure here. Can you see that? There was a break of structure here. So what am I waiting for? I'm waiting for a swing point to be violated. Oh, we have a wonderful one here. And what do we have here? There was a swing point that was being violated here. And why will I take this swing point as being violated? Because if I look at this candle here, this is a retracement candle 1. This body closed below this body 2. And this body closed below this body 3, making it more than 3 candles. Now, what will I do? I'll keep looking at it. There has been a shift in market structure here. What am I seeing here? This is a what? A bearish candle that would have pushed this bullish momentum upwards to cause a break of structure. But a swing point was being violated, making it what? A mitigation block. What do I have here again? I have a what? A fair value gap under confirmation. And what do I have the last entry here? I have what? I have an order block using all the institutional reference points I have available with me. I can decide to take my entry from here, mitigation block is my choice, and put my stop loss above here, or I can decide to take my entry from the fair value gap. It's still my choice. Can you see that on the fair value gap? And my stop loss is what? 4.5 pips. And I will come down here. Because I've been on the higher time frame, all this becomes liquidity, all this becomes liquidity, all this becomes money, all this becomes money for me. Why? Because markets will come back and take it all. Are you with me? Now I'll go back to my 1 hour time frame and I will target this low. We will give me a good risk to reward ratio. Some individuals will tell you you can use 1 hour and 15 minutes. Some people will tell you you can use 1 hour and 5 minutes. It depends on you. Now, I'm not scared. Why? Because number one, an inducement has been taken out. And number two, what has happened? A shift in market structure has happened on 5 minutes. Also, we have what we call ICT, that's SMC, Smart Money Indicator by Lux Algo. You can put that on to confirm your structure for those who are not strong with structure. And my coach always emphasized on using this, what we call volume. The volume gives you a momentum, a guide on when to know when markets. Hold on, let me edit this for you. I always give a shout out to my coach because it's not easy to find someone that can teach you forex trading that easily. So took his time to teach me, and I'm always promoting his name out to everybody. Now, what do we see here? I see that the volume is signaling to me that the bullish momentum that is going up has been reducing. Can you see? Meaning the buyers are reducing. The buyer's strength has been coming down. And what do I see here? I'm not afraid. I'm not scared. I'm not scared. What happened here? Market took out external range liquidity. It's just a rule. And what do we have? A fair value gap, which pushed it up to continue its momentum. So don't be scared. Some people would have changed their bias and say, oh, market has changed trend. What happened here? Would have been hit out. This would have been news. But we are not wrong with your bias. We're not wrong with the bias. Our bias is right, but we are not wrong. Some individual can decide to put their stop loss above here to be on a safer side, above this other block, just refining their stop loss as 5 to 6. Some people can put it above this one, that's this candle that has done a shift in market structure and on what? On 5 minutes. Hold on here. But you can use indicator for volume as a confirmation to indicate to you that, okay, If you look at this environment here, the buyers were reducing in momentum, and what happened? The sellers came in, and took control. But around here, what are you seeing? The buyers and sellers vote for momentum. Can you see that here? And what happened? We hit our TP, giving us what? A 1-to-9 ratio. So this is the best confirmation. When you hear people telling you they did a 1-to-25, 1-to-10, 1-to-15, this is how they got their 1-to-15, 1-to-20, 1-to-30 risk to reward ratio. Don't forget to subscribe to my channel. I hope this video was helpful to you. Ask your question on the comment section and I'll be able to answer all your questions to the best knowledge that I have. Thank you very much.